Okay, everybody, a very good afternoon to all of us here at the lunchtime webinar. I hope, as its namesake, we are all enjoying a good lunch right now or earlier as we invite Christine Sun, Senior Vice President of Research and Analytics of Orange Tea and Thai, to share with us what is the latest market outlook. So this is something that is exciting for us to actually find out what is happening in the market right now. You know, we all hear about interest rates, we all hear about a lot of things that are happening. So no other than a professional, Christine. Okay. Hi, Christine.
Hi.
Hi, Christine. Can I invite you to share your screen and your slides? And we cannot wait for you to share with us what's the latest market outlook. We promise that this is a lunchtime sharing. So in and out. We will also be opening the floor to questions. Just type your questions in the Q&A box. And for anything that you would like to find out more about as Christine does the sharing, and then we'll actually answer that after her presentation. So without further ado, Christine.
Hi, thank you. You can see my screen? Okay.
Yep, we can see.
Yeah, thank you very much. Okay, so thank you very much for coming down, as in tuning in for this talk during a lunchtime. Thank you so much, because I know that lunchtime is a very precious time. So I will quickly go through some of the market forecasts or market outlook in the coming months, especially since right now we do know that things are quite uncertain, especially from the macroeconomic perspective. So to begin, to begin, I always like to look at the global economic outlook, because that will determine what's going to happen to Singapore's economy as well as our property market. All right. So to start with, I think right now we all know that interest rate is still rather high and is projected to go up further. But because of the banking crisis, right now there are talks that the interest rate hike may even slow down. Fed may just pause the interest rate increase, and some people are even saying that interest rate hike may even start to stop, and then interest rate may start to drop. So that's the reason why you see that even for treasury bills, and even for people, some of you who have bought a Singapore savings bond, you'll see that how come some of these rates are coming down. So well, basically, if you look at inflation, because interest rate has to do with that means is quite directly correlated with inflation. You'll see that right now in Singapore, inflation is still rather high. But it's actually still, in a way, they are saying that it should be stabilizing in the coming months. And the other one that I find that is interesting to look at will be China, because everybody is very excited about China's reopening, and they are actually waiting for China to lift up their economies, because they are expecting many of these China's tourists to come, not only to Singapore, but all over the world. And the good thing about, I think if you look at inflation in terms of, for China's economy, is actually quite low. And in fact, they are also trying to keep their interest rate low. So in that sense, I think they are expecting quite a positive rebound in terms of their economic productivity over the next few months. And that will have some impact or to help, lift up the global economy. And in terms of global projections, this will give us a very good gauge of how IMF actually look at some of the world economies, even globally, what do they expect of this year and next year. And this year, I think despite all the challenges that the world economy is facing right now, they are still projecting a positive growth generally for the global economy. And for many of the advanced economies, like for example, like talking about places like US, Australia, and so on, they are still projecting about 1.2, but slightly lower because they are also looking at perhaps a slowdown in areas like maybe UK and US. But in emerging economies, for example, like even if we look at the region like Thailand, Indonesia, many of these countries, actually, they are stepping up on their productivity, and things are getting better. And if you look at in 2024, some people are saying that perhaps there could be a recession. But in general, if you look at the projections from IMF, I think they are still projecting a positive growth for the world economy for 2024. And if you look at the different areas, like for example, like in US, even in Europe and some other, all these developing economies especially, you'll see that there is still quite stable for next year. And in fact, they are projecting even higher growth for some of these regions. Right now, if we look at interest rate, where are we at? And this is one chart that we have generated from Fed. That means based on what Fed has introduced over the past decade. And you see that there's actually quite a lot of interest rate hike that has happened, like from 2017 to 2019. And then because of the COVID situation, it came down. But right now, we are seeing that more interest rate hike right now down here. Okay. And how does it compare quarter on quarter? Right now, we are actually seeing interest rate that is at the highest level in 15 years. And because of the banking crisis, we are expecting it to perhaps taper and start to come down. And what about how does our, because I was discussing with my research guys, that, most of the time in the news, we always talk about, how Fed is adjusting their interest rate, but how will it impact our 3-month SIBOR? Because that is how our interest rate is being measured for both the floating rates and the fixed rate. And you see that down here, this one, in this chart down here, it shows you the Fed interest rate. Now, if you look at this one, and compounded 3-month SORA, and as well as SIBOR as well. And you see that actually there's a very close relationship down here. So it means that, as long as Fed increases the interest rate, I think the changes that we see is actually within less than 1 month. So right now, if let's say Fed is going to slow down the pace of interest rate hike, so it means that our 3-month SIBOR will likely start to decline as well. Or start to slow down. Okay. And I want to talk about a bit more about the banking crisis, because currently this is the most major global event that is happening. And in fact, some of the reporters were even asking us, do you think that the banking crisis will affect Singapore, and as well as the Singapore's property market? Do you think that prices will fall? So to give you a flavor, a quick summary, because there's been a lot of news of coverage on this. Very quickly, you'll see that here, the banking crisis actually started from Silicon Valley Bank. And then after that, it went to Signature Bank. And of course, right now, the latest one is on Credit Suisse, all right, which is affecting the UK banking system. And how does it compare with previous years, all right? Right now, I think many people are saying that, because of this banking crisis, do you think that there will be a global recession like the one that we saw in 2008? Because that has also started because of the Lehman Brothers collapse. And this is one of the chart that caught my attention, because when I look at this chart here, it actually shows you what are the number of bank failures that have happened in 2008. And if you look at in 2008, right now, I mean, if you compare with now, some people are saying that, we should not be too alarmed, because there are only 2 banks collapsing this year, 2023. But if you look at what happened during the Lehman Brothers crisis, you see that there are so many banks that collapsed. But the other perspective that economists were saying is that apart from looking at the number of banks that collapsed, you can look at what about the assets that has been involved. So you can see that the recent 2 banks that were affected, Silicon Valley Bank and Signature Bank, actually these, in terms of assets, is actually quite, it's second highest historically and third highest historically. So this is another chart that I kind of like, because it actually see things in another perspective, which is instead of looking at the number of banks collapsing, you can look at the assets that has been affected. And you see that actually in terms of the amount of money that has been involved, is actually not very much lesser than what happened in 2008. So that's the reason why you can see that even global stocks and many I think indicators around the world, they are showing that, perhaps, there could be some weakness in the whole financial system. All right. So right now, I think things are still evolving, because let's see what's going to happen to the rescue plan for the banks. But I think about 1 or 2 weeks ago, our MAS stepped in to say that generally Singapore's banking system is still quite robust, and we are not very affected by what's happening in the US banking system. And of course, for the property market in Singapore, mainly because most of the borrowers, they actually borrow from our 3 big local banks. So in that sense, as long as our banking system remain robust, I think property market in Singapore may not be so affected. Okay, so right now, apart from the banking system, perhaps we may also want to look at what about the latest policy changes. All right, because we also understand that just about 2 months ago, about 1 month ago, they had quite a lot of announcements of key changes, after the budget. So this will have some impact on what's going to happen to the property market in the coming months. So I think basically for me, I feel that there are 2 major influences. All right, one is talking about the increase in buyer stamp duty, and the other one is talking about the increase in CPF housing grants. So if we look at the increase in buyer stamp duty, this is just a very quick summary to say that what are the key changes. All right, so when you buy a condominium that is above $1.5 million, there will be an increase in your buyer stamp duty, which goes up by 1% if it's between 1.5 million to 3 million. And if you are buying something that's above 3 million, it will go up by 2 percentage points to 6%. All right, and of course, there's also increases if you, let's say, for example, if you buy non-residential properties. So right now, if we focus on residential properties, all right, these are some of our observations or our expectations. So this is something that we have, we did our analysis and it was published in most of the mainstream media. So to lift up one that is from the Business Times, based on what we have mentioned, is that we feel that buyers right now may have some knee-jerk reaction, mainly because, for this buyer stamp duty, some people may say that, oh, wow, another 1% increase. So they need to talk to the maybe banks, to talk about how much their borrowings will be affected and so on. And of course, for us, we feel that, later on I will go through the different tiers of market segments. But in general, we don't really feel that this buyer stamp duty will have a very big impact. In fact, most of our agents on the ground, when they serve their clients, they did not say that, or some of the buyers, they were stopping, they are not buying properties because there's a 1% increase in buyer stamp duty. And in fact, many of the wealthy buyers, we expect them to be more affected because of the price quantum. But instead, I think many of them, they are feeling like, oh, don't really think that it's such a big issue. All right. So to give you a flavor of what segment of market will be affected and how, what is the magnitude of impact, we will look at the transactions in 2022. All right. So based on 2022 data, all right, what we notice is that, which are the properties that will be affected by the increase in buyer stamp duty. All right. So only those above 1.5 million will see an increase in buyer stamp duty. Therefore, all HDB transactions or all HDB purchases will not be affected by the increase in buyer stamp duty. This is because the most expensive HDB resale flat transaction to date is only $1.42 million. So all will not be affected. And most of the ECs will also not be affected. And about 50% of private homes will be affected. And how do we derive this 50%? So if we look at 2022 data, we notice that in terms of the transaction value, all right, 45% of private homes are less than $1.5 million. So that's about 50%, right? 40% will be between 1.5 million to less than 3 million, and 15% will be more than or equals to $3 million. So how much is it exactly, when you talk about $1.5 million? So we did a calculation and we noticed that, for, let's say, for example, if you're buying right now a new condominium in the suburban area, let's say, for example, for $2 million, the increase in buyer stamp duty is about $5,000. All right. And if you buy a $3 million property, it'll be about $15,000. But if, let's say, you calculate this amount of money as a percentage of your total property value, you'll find that actually the increase is not that much. For example, like 0.25%, and then for 3 million property is only about 0.5%. So therefore, those people who really want to buy a property right now, by and large, I think most of them will just continue to pay the buyer stamp duty. But for people who are investing, probably So let's say, for example, this is what I mentioned just now. HDB upgraders will continue to buy, especially for people who are able to sell their HDB flats for perhaps 800,000, 900,000, or above $1 million. So to them, paying extra $5,000 is not considered a lot. For investors, especially for those who purchase maybe a $2 to $3 million, they will likely pass the cost on to the next buyer. All right, that means next time when they sell their property, they will just include that 15,000 increase, or they may just simply raise their rents to cover the cost. And the other one that when we talk about wealthy buyers, I think most of them will continue to buy, because when we talk about properties above $10 million, most of them are willing to purchase one, because these are very rare properties, especially like those super penthouses. Some of them may buy like, maybe a landed property in Sentosa. And what about foreigners? Foreigners are also not likely to be affected, because first of all, they already have to pay a 30% ABSD. So a 1% increase is considered, it's not considered a very big jump. So in total, what we are trying to say is that in general, this increase in buyer's stamp duty is not very likely to have a major impact on the property market. And we also don't really think that because of the increase in BSD, so in general, prices will surge significantly. All right. So, but the other budget measure that will have more impact on the property market will likely be this increase in CPF housing grant. Why is it so? Because if we look at, for example, first timers who are buying HDB resale flats, if you're buying 2 to 4 bedroom units, right now, the government will be giving you a 30,000 increase in housing grants. And if you are buying a 5-room or larger flat, they will increase the housing grant by $10,000 to $50,000. So what does this mean? This will mean that, with more subsidies being given, we will expect more buyers to buy at popular locations. Some may also go to mature estates or even buy bigger flats with the additional grants. All right. So again, we go in to do a calculation. All right. So this calculation is something that will give us a flavor of what to expect of the HDB resale market. So what we expect is that, for example, a person buying a 4-room resale flat right now, it costs, the median price is about 530,000, and the 30,000 increase in grant will mean that it will cover about 5% of the price. And if you are able to receive the total grant of $80,000, and not even including like other types of subsidies, it can already cover about 15% of the price of a HDB resale flat. And if you compare with, let's say, for example, someone maybe they cannot decide whether I should buy a 4-room flat or 5-room flat. So if we look at the grant, you'll notice that the grant is actually lesser, about $10,000, which actually translates to about 1.6% of the purchase price. And the total grant will only cover about 7.8%. So from this thing, we already know that because more grants are given when you're buying smaller flats, so it means that people are likely, or first timers are likely to buy more 4-room flats or 3-room flats moving forward. And that will also mean that the increased demand may likely drive up prices of 4-room resale flats in future. And of course, with that, right now, we may also see more people switching from buying mature, that means HDB flats from mature estate to non-mature estate. So for example, in the mature estate, it's about 600,000. And for non-mature estate, it's about 500 over 1,000. And there's a price difference of 85,000, and they can actually use the additional grant to cover part of the this price difference. And the total grant can actually cover almost the full price difference between a mature and non-mature estate HDB flat. All right. So why is this important? Because we already know that in September, there were cooling measures that were implemented. And because of that, HDB resale volume has actually dropped. So down here, this is one example, all right? This is a HDB resale volume. You see that in September, after cooling measures were implemented, volume, actually there was a knee-jerk reaction as what we have predicted, and there was a fall in terms of demand. But slowly, sales volume started to climb up. And in fact, this was quite encouraging, because even in December and January, sales volume continued to increase, although it was during the holiday period, it was during the Chinese New Year period. So why is it that I started talking about the CPF housing grants? Because when the CPF housing grant is going to kick in from here, February and March onwards, I think sales volume will continue to go up, and likely prices will continue to go up. And of course, whatever happens to the HDB resale market, it will also affect the private market. So as long as people are able to sell their units or their flats at a higher price, that means there will be more people who will be able to buy or upgrade to a private housing. Okay. So all right. So enough has been said about the public housing market. Right now, I will go on to talk about what about the private market right now. Okay, and we do see more foreigners coming in as well. All right. So in terms of new home sales, all right. So what has happened after the cooling measures? All right, we know that there's a cooling measure here in September, and because of the cooling measure, there was a dip in terms of number of new homes that were sold over the last 3 months. That means in October, November, and December. But again, we saw that there was an uptick. That means there was a rebound in terms of sales volume in January and February. So this shows that buyers were starting to come back to the market in January and February. All right. And what about the sales launches? I think for the previous two, these are two major launches that took place, I think around March and in February. The one is the Botany and Terra Hill. So Botany sold about half their units on launch day, and Terra Hill sold more than a third of the units at launch. In general, I think some people are saying that our sales seems to be slightly slower than before the cooling measures. But if we put things into context right now, considering that there were two major cooling measures that were implemented, one was in December 2021 and one in September 2022, and as well as right now interest rate is at quite a I mean it's a 15-year high, and as well as we also know that other taxes have increased and so on. So if we take things into totality, we'll see that actually new home sales is still quite healthy right now in the market. And what about foreigners? Many people are very interested to know that right now, since mainland China, as in China, has really reopened their borders fully, so does it mean that many of these mainland Chinese will be coming back to Singapore? So if we look at in terms of the first 3 months of this year, you'll see that China still remains to be the top foreign buyer in Singapore, and so are all the other nationalities like Malaysians, Indians, Americans and Indonesians. And in terms of this foreign purchases, you'll see that the proportion of non-PR purchases has actually continued to increase over the past 2 quarters despite the cooling measures. So you can see that right now, in terms of foreign buying, is actually quite at a high of 7.1%. And this is quite high when compared to, let's say, for example, at the start of the pandemic at 5.6%. Okay. And in terms of what about people who are buying, foreigners buying homes in the city fringe? You also see that there's actually quite an increase in terms of foreigners who are interested to buy homes in the city fringe. And what about mainland Chinese buying? All right. So as of now, we are okay because this is not the full quarter. So you see that the data is slightly lower, but it should be slightly more when we include the whole month of March. But even then, so far we have not seen a very major rebound in terms of sales demand from mainland Chinese. And I went in to look at the details, and we found that if we see mainland Chinese buyers, that means they are non-PRs. Actually, the number has not really come up a lot. Well, one of the reasons could be because they are still in China, because of Chinese New Year holidays, so they are still doing their domestic traveling, And the other reason, when I look into the data, it seems like there were more mainland Chinese buying through PR. That means they are actually not non-permanent residents, but they are buying because they are PRs, and some of them could be new citizens. So it doesn't reflect as mainland Chinese, they will be reflected as Singaporean. All right. So that's the reason why in terms of the numbers, you don't really see that there's a big hike. And just now I went in to look at the population numbers. Just last year, I think there was an increase of, 20,000 new citizens. And all these people definitely need new homes. So this could be a reason why we have not really seen a surge in terms of mainland Chinese buying. But in terms of proportion, I think is still rather healthy at about, that means above what we're seeing before the pandemic. And what about, this is what I mentioned just now in terms of who are actually buying the properties. And you'll see that here, again, you know, throughout the years, PR, all right, that means mainland China PR actually form the bulk of buyers, Chinese, and these are the non-PRs. That means these are the pure non-permanent residents, all right, from China. Okay. And where are the places that they are buying? Most of them, they like to buy in, you know, usually when there are new launches or, you know, there's more competition in certain area. So for example, like over the past 1 year, there's been more homes that have been completed in District 19, like in Hougang and Serangoon. So you see that many people, mainland Chinese buyers are actually buying properties here. And of course, they still like the traditional District 9 and 10. And of course, District 3, which is harbourfront, you know, places like Reflections and so on. So this is mainly because maybe the harbour view. And District 5 is where you have the homes in Pasir Panjang. All right, so right now I go into City Fringe market performance. Why City Fringe? Because Riviera, which is one of the projects that we are you know, introducing to you, which is one of the prestigious project in the City Fringe area. So maybe we can look at what is the market performance for this market segment. All right, so if we look at the City Fringe, which is marked by RCR, the number of you know, properties that have been sold in the area is actually gone up as well after the cooling measures. And of course, prices is still quite stable, and in last month, it has actually gone up slightly. And in terms of you know, new home sales in RCR, all right, so right now we drill down into the market segment. Again, there is a rebound in terms of sales transactions over that means last month, and prices, there's a gradual uptrend. All right, and these are the best-selling new condominiums in the City Fringe. For example, like Piccadilly Grand, Live at MB, and Riviera, of course, you know, and most of them, I think you can see that their designs are all very nice as well. Okay, and in terms of sweet spot, so where are people buying in the City Fringe? And you notice that down here, you see that as the time goes by, the price quantum is actually getting larger and larger. So that means that people are actually the appetite for maybe bigger City Fringe homes, or you know, they are more willing to pay for City Fringe condominiums, all right, over time. So right here, let's say for example, like this purple area, this bar actually shows properties that are above $3 million. And you can see that there's actually an increasing trend of people buying $3 million properties in the City Fringe. So where are the sweet spot? Down here, you'll see that in the last quarter of last year, most of the people have bought about $2 to $3 million properties in the City Fringe, and that is followed by $3 to $5 million, and then 1.5 to that means to $2 million. And what about in terms of size? You know, what are people buying? So not only are they buying properties that are more expensive, but also they are buying bigger units in the City Fringe as well. So you will see that those units like between 1,200 to about 1,600 units. You can see that this red bar here, there's actually an increasing trend over time. And there are also more and more people purchasing, for example, like maybe, you know, this really big units of more than 1,600 square feet. So here, in terms of sweet spot, you'll see that most of people are still buying around 800 to 1,200 square feet. So that's like your typical, maybe the bigger 2-bedroom or 3-bedroom units. And then that is followed by, this is quite equal, which is the 500 to less than 800 square feet, and followed by the 1,200 to 1,600 square feet. Okay. So what about resale transactions? You'll see that in the City Fringe area, not only new homes, you know, there's a rebound in sales. You see that in terms of resales, there's also a rebound. And one of the reasons could be because prices have come down slightly. But if let's say when we go into the transaction itself, you'll notice that it's not really because prices have dropped. It's like just now what we have mentioned, there are actually more people buying bigger homes. And usually when you talk about bigger homes, the per square foot price will be slightly lower. All right, so right now I'll go to the last part, which is our price projection. So based on what we have mentioned just now, the economic uncertainties, given that there'll be more people who will be buying like resale flats, after the budget, and of course, with the just now we mentioned about the interest rate, interest rate, stabilizing and so on. So what is the kind of a price and sales volume projection? So to go into that, I think it's important to look at Singapore's economic projection, and you see that despite all the things that has happened, I think our our government is still projecting a positive growth for Singapore, and even with all the uncertainties that is facing the market, I think economies are barely changing their forecast for Singapore's growth. All right. And Singapore still remains to be the 8th on list for most popular city for the super rich. And I like this chart because it actually shows you the migration of millionaires. And based on this, you can see that there were about 1,000, millionaires that came to Singapore versus, let's say, for example, like in China, there was an exodus of about 15,000. All right. So in general, what are we projecting? I think we are still expecting a positive price growth, but definitely slower when compared to the previous 2 years. So this is our price projection of about 5 to 8%, and this will be slower than the 8.6% that we've projected, as in what we have seen last year and the previous year as well. And in terms of sales volume, because prices have actually run up by quite a fair bit. Here you can see that the price index have gone up, and because of that, I think sales volume will be still maybe just slightly more than last year, or maybe on par last year. So if we go into the different market segments, you'll see that new home sales, we are expecting more launches because this year there'll be about 46 new projects that'll be launched. So with that, there'll be more new homes as well, and because many of these homes will be either in the core central region, which is the luxury segment, or the city fringe area, so their price point will be higher. So this could be a reason why prices may continue to trend upwards. And for resale market, we are also expecting that prices may continue to go up as long as employment remains stable in Singapore, because we do know that many of the homeowners in Singapore, they are not really willing to drop their prices, to be honest. So they are still holding firm to their prices. Of course, because of that, the resale volume may also come down slightly. Of course, many people are saying that this year there'll be many more new condos that will be completed. So because of that, there'll be more transactions. But I think to put things into perspective, you will see that actually these condos that are going to be completed this year, or by the second half of this year, they are actually properties that were sold just before the cooling measures in 2018. So because of that, some of these properties, because of the increased ABSD and so on, so some of these people, when they bought the properties, they are already buying for their own homestay. That means their own owner occupation, and not so much for investment. So that's the reason why, even with many completions, it doesn't mean that many people will be putting up the units for sale, because they'll be staying, they'll probably be shifting maybe from their rented units to the units and so on. So that's the reason why we didn't really see that there'll be a big surge in terms of number of resale volume this year. But of course, some of them will also go into the new sale market because there'll be more launches. And in terms of rental, wow, this is one really hot market, because you can see that, whoa, look at this trend. And this is, I was just talking to one of the Bloomberg reporters, and he was rather shocked that just over a year, last year in 2022, there was almost a 30% rental growth increase. And this is actually, if I'm not wrong, a historical high rental growth that we've seen in Singapore. And even this year, we are projecting a double-digit growth as well, because we are expecting the volume, that means the available units for rental, to continue to be, quite, that means there will not be a big increase, although there'll be more completions. Again, mainly because many of these will be owner-occupied. And the other reason is also because for the available stock in the market, many people are signing longer leases. That means they are signing maybe 2 years or 3 years to lock down the rents. So because of that, there'll be less and less stock over time. So this is just a quick summary of what is our market projections. So you can see that in terms of prices, likely to stabilize this year, and this will be the same for both new sale and resale. And for rental, we are expecting a double-digit increase. And lastly, of course, a HDB resale market, we are expecting prices to continue to go up. Like just now, what we mentioned is that more of these first-timers will continue to buy resale flats because of the CPF housing grants. And of course, in terms of volume, it may not spike up too much, to be honest, mainly because the number of flats that will reach MOP will be about half of what we have seen last year. So already the supply has already come down. And the other reason could also be because of price resistance. We are hearing that, you know, many of these potential buyers, they are also, you know, quite, there's a bit of price resistance in the market, all right? So with that, we are projecting a slower pace of price increase of 5 to 8%. And in terms of sales volume, could be on par or slightly lower than last year. And lastly, for rental, we are expecting again, you know, rental to continue to go up. Again, you know, there was almost a 29% increase or 30% increase for last year, which is quite a lot. And this year, we are still projecting a double-digit growth. Mainly because no matter what, HDB resale rental units are still the lowest entry level, you know, or the cheapest accommodation in the market. So there will always be demand, especially since rents are still pushing upwards. So there will be more people who may turn to HDB rental. Okay, so in terms of volume, again, because there are not so many units available for rent because of the decrease in flats reaching MOP this year. So we are expecting slightly less or about the same as last year. All right. So in terms of projection, you can see that prices, this is what we mean by stable prices stabilizing. And in terms of rental growth, it will still be double. Okay. So if you want to know more about this, what we have presented today, you can always go to our Orange Tea website, go under research department, and you'll see many of these reports on the outlook. What are the upcoming new launches, you know, and so on. You can go there. And of course, if you want to know more about our new upcoming launches, as well as this very good project, which is Riviere, please approach our Orange Tea agents who will be able to, you know, share more with you. All right, so that brings me to the end of our presentation. And now I pass my time to my colleague who will share a bit more about Riviere.
Thank you, Christine. Thank you so much. I think that was super insightful and a very good summary of the market updates. As mentioned, actually, the rental market is still on the uptrend, and it's still going to be a double-digit increment in 2023. And so some of the clients and our agents have also asked us about the TOP projects. And that is how Riviere actually came about, because sorry, the screen just caught that. Yeah, so in that district itself, Riviere is the only project that TOP this year, and we're very excited to actually share more about it. So we'll actually show a virtual site tour of Riviere that was taken just last week. Okay, and can we play the video? Just a quick update. Riviere is actually a prime waterfront living concept condominium development, and it is super rare because it is actually by the Singapore River, and residential developments along there is actually super limited. This video was taken last week, and from then, in a matter of days, actually the units were sold again. So when you look at the video, you will hear that there are only a final 11 units that is now down to the final 10 units. Okay, so without further ado, let's look at a little bit more about what Riviere has to offer.
Hi, welcome to Riviere. Riviere is situated at a very unique location just next to Singapore River. Within its location, it is between two MRT, the Great World City MRT as well as the Havelock MRT. In the neighborhood of Riviere, you actually have F&B, shopping center like Great World City, lots of amenities and the convenience that you're looking for. And here you are, this is Riviere.
Hi, over here we have a gym Riviere, which you can exercise inside the gym with all the equipment needed for you to exercise. Beside this gym, right, we also have the Club Riviere at the first floor, which we have a barista to serve your customer or your friends drink and coffee throughout the whole day. Besides these two facilities, we also have Riviere dining and a concierge service from 9 a.m. to 9 p.m. Besides all these facilities on the ground floor, we also have a lot of facilities on the roof terrace at the 37th floor. Yeah, please come over here to explore more.
Hello, welcome to Riviere. Where we are at right now is the final full ID unit that is left. It is a 3-bedroom unit at 1173 square feet, proudly designed by Synosia. As you step into my living room, you will realize that the space is luxurious. My wall-to-wall is 3.2 meters and my ceiling height is 2.85. All of this adds on to the generosity of space and size that a Riviere floor plan can offer you. On top of this luxurious size, Frasers will also be providing us with top-notch quality finishing, which is full marble flooring, as well as huge bedroom sizes. As you step into the master bedroom, you will see that that is a king-size bed, 2 side tables, and super ample leg space. The common bedrooms are also very generous. None of the rooms in a Riviere floor plan is less than 10 square meters. Now, let's get to the best part. As you step out onto the balcony, you will enjoy unblocked spectacular views of not just the Singapore River, but also of the city skyline as well as of the sea. And this is what made me fall in love with Riviere. We are left with the last 11 units here at Riviere. Only 2 units of 1-bedder and 9 units of 3-bedders. Choices are super limited. We have a short time promotion that's ongoing, so please do reach out to your preferred Orange Tea and Thai agent to find out more, and don't miss out on our final 11 units at Riviere.
So that was just a very short video about where Riviere is and what we have to offer. We are going to have an event tomorrow right on site. So definitely welcome everybody to contact your preferred Orange Tea and Thai agent and just register and come down and find out more, not just about the project itself, but also about the heritage and history behind Singapore's coffee journey. We thank Christine for her sharing. For Riviere, just one more thing I would like to say is that just capitalize. There's a lot of, there's very limited stock. Okay, so do contact your Orange Tea and Thai agent to find out more, and we'll look forward to seeing you tomorrow at Riviere itself. Thank you, everybody.